This video is for entertainment purposes only and is not financial advice. Hey guys, welcome back to another video. My name is Josh, and in today's video I wanted to talk about the A2 Milk Company and its share price. So over the past 2 months, its share price have been dropping quite dramatically. So in today's video I wanted to talk about the news that has caused the sell-off in the A2 Milk shares, as well as some of the rumors circulating on online forums as well. And I'll also give you guys an update on my valuation for A2 Milk in light of all the recent news in the market. So if you enjoyed today's video, be sure to hit like and subscribe, but with no time wasted, let's get right into the video. So over here I do have a screenshot from my previous video on the A2 Milk's share price on the 25th of February 2021. So that was a couple months ago, and this was on the day of their half-year results announcement. So as you can see, the share price dropped 16.08% on the day, and the prior 6 months to that, the share price did drop roughly 53.44%. So if you want to find out what's caused the 53% drop in the A2 Milk's share price prior to the 25th of Feb, you can check out my previous video. So to give you a quick recap, the half-year announcement that A2 Milk made was actually not too good. As we can see, the company's outlook for group revenue was on the order of 1.4 billion, where they previously guided $1.4 billion on their lower end of their guidance, and group EBITDA margin also decreased to 24 to 26% from previously 26 to 29%. So that is quite a big drop in terms of guidance for revenue and EBITDA. And they also had a statement over here that said the outlook for FY21 assumes that the actions being taken to reactivate the Daigou/reseller channel deliver a significant improvement in quarter-on-quarter growth from Q3 of 21 to Q4 of 21. So this statement over here does make it look like their expectations for revenue and EBITDA is a little bit optimistic, because we've seen news out there now that show that the Daigou or reseller channel might actually not be improving as quick as they're expected, but more on that later. So obviously with this downgrade does come a lot of analysts downgrading their expectations for the company as well. So we can see that the average target price consensus for the 9 analysts covering the A2 Milk stock had decreased quite dramatically. So before the earnings announcement, I just took a date from 15th of February because the announcement was on the 25th. We see 9 analysts covering A2 Milk. The mean value for their target price is $13.56. So as we can see on today's date as of recording, we see 9 analysts having a mean value of $11.18. So that is roughly a $2.40 drop in their target expectations for the A2 Milk share price. And if we look at the share price as of recording, the share price is now $7.45. So since the half-year results, the share price has dropped another 20.13%, or $1.88 per share. In terms of the announcements though, there hasn't been any price-sensitive announcement made by the company since the half-year results. So as you can see, this P flag over here signals that it is a price-sensitive announcement. From what we can see, we do see a bunch of substantial shareholders or institutional shareholders selling out of their A2 Milk shares. So over here, I do have screenshots of the different institutions selling out of their shares. So as you can see over here, we do have Mitsubishi selling out of their shares, roughly 7.6 million shares announced on the 27th of April. So over here, we do have Commonwealth Bank of Australia selling 7.4 million shares announced on the 23rd of March. We also have Pendal Group selling 1.2 million on the 21st of April, and Morgan Stanley nominees selling roughly 2.3 million shares on the 20th of April. And the worst part is because Pendal and Morgan Stanley are now below the 5% mark. If they do decide to sell their shares, they don't have to make any announcements. And over here, I do have a screenshot from Simply Wall Street of the ownership breakdown of A2 Milk's shares. And as you can see over here, we do have institutions owning 60.2% of the total shares outstanding. So if institutions are now dumping the stock, there is quite a long way to go. All right. But on the bright side, we do have UBS Group buying some shares, at least 2.1 million shares since its previous disclosure. So now they are above that 5% mark where they do have to announce when they buy shares. But, you know, these nominee accounts do frequently go above and below that 5% mark. So that's why we see a lot of the announcement for the substantial shareholders. But I wouldn't pay too much attention to this because it doesn't impact the fundamentals of the business. It It does impact the short-term price movements, however, so this could be a potential buying opportunity. In terms of news that give us an indicator of the fundamentals of the business, we do have some commentary coming out of Synlait's half-year results, which gives us an indicator on how well the company is doing. Synlait is the main producer or manufacturer for the A2 Milk Company, so when they have something to say about how business is doing, it usually gives us quite a good indicator of how things are going for the A2 Milk Company. So over here I do have an extract of the half-year 21 results of Synlait announced on the 29th of March 2021. So over here it says ongoing uncertainty in the A2 Milk Company's expected demand for the remainder of FY21 and 22. Synlait does not currently have sufficient confidence to forecast when this recovery will occur. The resulting impact of this on Synlait's business is twofold. Demand for consumer packaged infant formula remains uncertain, which in turn impacts forward infant-based powder production and asset use. From this announcement, we know that Synlait can't accurately forecast their production demand because that could potentially mean two things. First of all, it could mean that A2 Milk doesn't know actually how much it will sell going forward, so it's not sure how much it actually needs to produce. Or it could also mean that A2 Milk is selling down their excess inventory and so it doesn't need production still. But both of these things does indicate that business isn't going too well, because if you're not selling, then you wouldn't need any production. So when there's uncertainty in the demand for production, that is not good, right? Because this is not upside uncertainty, this is downside uncertainty. So this is actually quite an ominous statement from the Synlait management team, and because of this I actually did revise my projections for my fair value calculation for A2 Milk, which I'll talk about a little bit later. But in other news, we also have some rumors going on that A2 Milk could potentially drop out of the MSCI Total World Index. So over here from the New Zealand Herald, I do have an extract from the 27th of April 2021. So I have a quote here from Dan Stratford, investment advisor with Forsyth Barr, saying that if A2 Milk falls out of the index, we don't know yet, then passive fund managers who track the index will have to sell. There may be more selling in A2 as investors like to get ahead of the curve. It's a bit of a worry for A2 Milk. So I went and searched for the constituents of the Total World Fund to see what the weighting of A2 Milk is. And as you can see, on the 1st of December 2020, the A2 Milk Company was roughly 0.01493%. Now, this doesn't necessarily guarantee that the A2 Milk's share price will drop if the index drops out A2 Milk, because as we've seen with the BlackRock fund selling off its shares in Meridian as well as Contact Energy, on the day that the fund sold its shares, the share prices actually went up. But in the previous 2 months before that, we saw the share price slowly trickle down when the market knew that there was a change in the S&P methodology for that index. So this is not a slam dunk scenario that the share price of the A2 Milk Company will drop. This is merely a rumor, so I wouldn't pay too much attention to it, but it could have some short-term price impacts. But it doesn't impact the fundamentals of the business. Now, moving on, we also have other news over here. FN Arena on the 22nd of April did have some opinions of different brokers out there. So Credit Suisse said that slowing birth rate may impact infant formula sales soon because of the aging female population in China as well as lower fertility rates. They do expect this to weigh down on sales going forward into 2025. But we also have other news out there saying that the A2 Milk market size is expected to grow at a CAGR of roughly 18.6% from 2021 to 2030. So that is a huge growth rate for the industry in general. This is not the A2 Milk Company, but rather the A2 Milk market in general. So this is more like future projections of the industry in general, and we won't see this until we see it. So it's very hard to predict these kinds of things, but we do have both headwinds as well as tailwinds going on for the business, but it's important to keep these factors in mind. Now, in terms of going forward into the next few months, I do want to bring you back to a management statement about the Daigou channel. So their forecast of 1.4 billion revenue and 24 to 26% EBITDA margin is dependent on the actions being taken to reactivate the Daigou/reseller channel. And we haven't really heard from management how that is going 2 months out. We might get a trading update but at the moment we haven't heard anything yet. So I do want to balance out the bearish views a little bit with what the Comvita CEO had to say. So Comvita is New Zealand's largest producer and marketer of honey and bee-related products, and recently they did report their results, and the results show that New Zealand and Australian sales fell 21% to 18 million in the 6 months to the end of December 2020. And the reason for that is because the pandemic had shut down international borders and disrupt shipping, pushing up freight costs. So that is very similar to what A2 Milk had experienced. But what I found quite interesting was that the CEO was quite optimistic about the Daigou channel. So as you can see over here, Banfield expects the Daigou trade to rebound. The Daigou sector is very entrepreneurial in the way they approach things. They are innovative. So whilst they have had challenges over this period, they will find new ways for their business model to evolve so they can reach their user base in China. And I tend to agree with him. When people's livelihood depend on selling product, they will find other channels to do that if that channel fails. All right, so if the Daigou channel fails, it's not like they're just going to sit on their hands and do nothing. They'll find another way to get those sales out. So I tend to agree with him, but the issue is, when will that recover? We don't know. There's no news from management of A2 Milk. But if anything, the CEO of Comvita does give bulls a little bit of hope in this scenario. All right, so now let's take a look at valuation of A2 Milk. So as you can see over here, the valuation of A2 Milk has dropped quite substantially from the previous 2 years. So in the previous 2 years, we can see that the PE ratio, the forward PE ratio in particular, has trended around 30 to 35 times. And more recently, in the past half year or so, we see the forward PE drop to between 20 and 25 times. So right now it is currently at 22.54 times. So that is a huge PE re-rating, and that does show that the market is expecting much lower growth rates from the A2 Milk company going forward. So now I'm going to share with you my calculated valuation for the A2 Milk company, and based on the news announced by Synlait, I have reduced my revenue expectations going forward. So in each of my cases, I've reduced revenue by 50 million. I've also reduced growth rates for years 1 to 5 by 2%, and I've also reduced the terminal multiple by 2 in each case as well. So if you want to see the full spreadsheet that I have, you can check out my previous video, but I won't go into too much detail now. And I've also added back in the net cash position. So a viewer on the channel actually did leave a comment that I should add back the net cash position. And on further thought, he was actually right. So that does show that my calculations aren't always correct all the time. So make sure you do your own due diligence as well. So I've added back in the net cash position, and I calculate an equity value per share of $9.61 per share, and a forward PE ratio of roughly 24.5 times. So the analyst expectations was roughly 22.5, so I'm a bit more pessimistic with a 24.5 PE ratio. So at the current share price of $7.46, there appears to be roughly 22% margin of safety. So based on what I'm hearing from other companies and what I'm seeing in the news, I'm not too optimistic on the Daigou channel rebounding in the next few months, but the current valuations does look a little bit cheap. But bear in mind, if they come out with a fourth downgrade, then the current share price could look expensive again. So it really is up to you to decide what to do at this point. At the current share price of $7.46, it does look like a value play, but it could very well be a value trap. So that's all I have to say about A2 Milk. I haven't started a position in the A2 Milk company yet, but if I do decide to buy in some shares, I'll definitely give you guys an update. But leave comments down below what you think about the A2 Milk company. Always be keen to hear your thoughts. Thank you guys for watching. Until next time, take care.